If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today is August 10th, 2020, and today is Monday morning. So looking at the highlights of the day, the markets retrace across the board. So let's take a look. So we're really at the tail end of the summer, which means that there's less economic events coming out. So looking at today, we don't have any economic events scheduled, but looking at the markets, we watch the major currencies retrace versus the USD. That's the first category of assets that retraced. And looking at the NASDAQ, it retraced to support, while the Dow Jones actually did something unusual, and it's trading at resistance-ish level, gaining some momentum on the upside. We're going to take a look at that. And looking at gold retracing and oil pretty much steady. And lastly, looking at the stocks, it's the FANG plus Microsoft that retraced last Friday and sold off. And JP Morgan is steady. So a little bit of a rotation in the markets, but let's see what we can expect from today's trading. So we're going to start here with the Euro USD at a weekly chart. And pretty much this hit final resistance at this 119.15-ish level, but not breaking up higher, and just sitting there with a bunch of candles there and not branching out higher. So with that said, I do expect a little bit of a retracement sometime this week. And beyond that, it's also the heart of the summer trading, the tail end of it, where most of the fund managers and financial institutions are taking some vacation, and especially in light of the pandemic that everybody is already at home already. So looking at the Gbp Usd, we saw the same thing as it hit this upper limit of 31.66. We're trading at 30.60-ish level. Looking at the USD Rand, okay, now this is an important one as it did rally, okay, after breaking this downwards trend line above the two moving averages and rallied to 1761. But at this stage, we may hit a little bit of a resistance-ish level, so just be aware of it. Now looking at gold. Gold retraced from 2,074 down to 2033. If we look at a daily chart, it in comparison, okay, to how much we've gained over the past month, okay, this is just a very minor retracement, okay? And people booking some of their profits as, lighter trading kind of chimes in. And since you have that environment, the markets retrace, okay? And it's quite natural. Now, when we look at the Dow Jones, we saw something completely different. It's rallying to 27,464. We're looking at a daily chart, remember. Okay, so we're right now only about 2,000 points from our all-time highs, where we hit at 29,500 and we're at 27,466. So with that said, if this does break this above this 620 level and sustains it, we may even go to 28,500-ish level. Okay, I know that this is still up in the air and still very difficult to go up higher, but you can't beat the graph. The graph is showing us that it has that momentum on the upside right before that breakout, where we saw some of the stocks having that last week, like Alcoa had it, and it's also backed up by the fact that the stocks are firming up on the upper limit. Okay, so the stocks have to break out, and then the Dow Jones was also breakout. Okay, so this is a very important junction that we're trading in today. However, when we look at the NASDAQ, we saw a separate story yesterday. Okay, it actually sold off from its high of 11,278-ish level down to 11,000 and then bouncing. Okay, so I do expect this to bounce further. It's just a question of how much and when. Okay, and since we are going into summer trading, like I said, since we are in summer trading, I'm not sure how much of a bounce we'll get in the next couple of days. Now looking at Apple, it did retrace a little bit also, just like gold did. Facebook retracing, not even a red candle. You can't see it. Only looking at a 4-hour chart do you see it. But retraced from its highs of 276. When we look at Amazon, it looks like it's making a triple top here. Okay, so I'm not saying there's bearish signs, but we may just be finding ourselves trading in a new range, okay, with this upper limit of 11,278 in the NASDAQ and some of these stocks hitting their upper limit. Now, lastly, looking at JP Morgan, of the stocks trading at 99.32, but it's within that reason. It didn't break out higher above this 101-ish level, so nothing to really write home about, just that it's firming up, okay? If it did break above this 103, I'd be a little bit more excited about it on the upside. Okay, but remember, it's got to be backed up with volume. Now, lastly, looking at Bitcoin. Okay, now this has gotten much stronger and firming right below 12,000. That's an important psychological number. It did hit it just briefly, but it does need to break it with some ump. If we do get that, we maybe could get ourselves in the 14,000 range, okay, in the next 6 weeks. Okay, so something to consider if this does break out. You want to keep this on the radar, okay, because it is starting to become much more interesting. Okay, the VIX, which gauges the volatility in the market. Okay, let's just take a look at that because we haven't ever looked at that. And I think it's an important indicator to actually look, because this is since February of 2020. Okay, we're hitting that range. Okay, when we started having the massive volatility in the markets, that was on February 21st. And that's indicative of this area right here. Now, the VIX, like I said, it basically gauges the volatility in the market. That's all it does. And you can actually trade it. And it did break out, okay, in February 20th up to 85, okay, which is unprecedented since the debacle of 2008. I think we hit over there a little bit further. Okay, we could look at that as well. But look at where we are right now. This is the point. We are at 22. We're right at that level where we gapped up. Okay, so, you know, it's interesting if we do break this 22-ish level, if we're going to go back to this 1875, which is normal market conditions. Okay, it's normal volatility for the market to be trading on those intervals. But just for your clarification, if we go to a monthly just to see where we are in 2008, we hit 96. Okay, in the height of this, we hit 85. So, you know, with the volatility index, you want to keep it on your radar. Okay, I do think that we will be receding and selling off in the volatility just because we're going into, you know, really the heart of the summer, the balance of the heart of the summer as we go into September. So keep this in mind that we are in much lighter volume going into the balance of the summer. This is Fred Razak. I want to wish everybody a great trading day. Thank you.